Started investing just 3 years ago at the age of 18, and from day one, there was one thing I always knew I had to stay as far away from as possible, and that was crypto. Not only was this a time of rampant fraud and scamming with the old NFT craze, but the greatest investor of all time had already warned us.
Now, if you told me you owned all of the Bitcoin in the world and you offered it to me for $25, I wouldn't take it because what would I do with it? I have to sell it back to you one way or another. I mean, maybe I have the same people, but it isn't going to do anything. The apartments are going to produce rental, and the farms are going to produce food. And if I've got all the Bitcoin, I'm back where whatever his name was, who may or may not have existed, was 15 years ago. If I've got it all, he could create a mystery about it. But everybody knows what I'm like. I mean, so if I'm trying to get rid of it, people will say, well, why should I?
But even after Warren Buffett said this, the wider population still believed Bitcoin was the exception to the rule. People were hailing it as the replacement for gold, the currency of the future, something that nothing could stop, especially now that every economically developed country debt had spiraled out of control. That one crypto everyone believed in was Bitcoin. But today, or even just this past month, reality has set in for those who made these claims. As of this recording, Bitcoin is sitting at an abysmal $67,000. That's a 30% collapse from the beginning of this year. So what led to this, and why are people so bullish on Bitcoin in the first place? To understand this collapse, you have to understand the euphoria that preceded it. When Donald Trump won the presidential election in November 2024, Bitcoin was trading around $68,000. Within days, it surged past $76,000. By December, it had broken through $100,000 barrier for the first time in history. The so-called Trump trade was in full swing. The thesis was relatively simple. Trump had promised to make the United States the crypto capital of the world. He pledged a friendly regulatory environment, the removal of SEC Chair Gary Gensler, support for Bitcoin mining, and most significantly, the creation of a strategic Bitcoin reserve. The crypto industry threw massive financial support behind his campaign, and when he won, they expected to be repaid. For a while, it looked like the bet was paying off. Trump pardoned Ross Ulbricht, a new SEC chair was appointed, the Genius Act passed, a White House crypto council was established. Bitcoin kept climbing. $90,000, $100,000, $109,000 in May 2025. And finally, an all-time high of approximately $126,000 in October 2025. The narrative was irresistible to new investors who wanted to jump on the bandwagon. With governments drowning in debt, the US at $38 trillion, the UK at 96% of GDP, Bitcoin was positioned as the escape hatch, the hedge against fiat collapse, digital gold for a broken monetary system. But the rally was built on leverage, not fundamentals. Investors were not just buying Bitcoin, they were borrowing heavily to buy more, pledging their existing holdings as collateral. According to NPR, this rampant speculation turbocharged the market but left it dangerously exposed. Then came October 10, 2025. Trump threatened an additional 100% tariff on Chinese import. Risk assets sold off, Bitcoin dropped, and unlike the stock market, it never recovered. The leverage that had fueled the rally became an accelerant for the crash. Forced liquidization cascaded through the system. ETF inflows, once a pillar of demand, reversed into net outflows. Miners squeezed by tight profitability began selling their reserves. Institutional demand, according to CryptoQuant, reversed materially. Bitcoin has now broken below its 365-day moving average, and the first time since March 2022. The Trump trade has completely been erased, and the narrative of Bitcoin as a safe haven has now been shattered. So what do investors actually make of all this? Peter Schiff, the gold bug who has been calling Bitcoin rat poison for years, is having a field day. This wiki pointed to China as the ultimate proof that Bitcoin was always a false error. Trump says he believes in crypto and wants to make the US the Bitcoin capital of the world because if we don't, China will. Schiff wrote on X, but Chinese leadership is too smart to care about Bitcoin whilst we are wasting capital and resources, they are building factories and buying gold. And you know what? The numbers back up. China's central bank has been on a 14-month gold buying streak, adding approximately 30,000 ounces per month. The gold reserve now stands at 2,306 tons, valuing at over $319 billion. Meanwhile, they have maintained strict controls on cryptocurrency trading and mining since 2021. And that's not a country hedging its bet. That's a country making a strategic choice. Schiff went further, argued that Bitcoin has entered a long-term bear market when priced against gold. Bitcoin was told to invest it as digital gold, he wrote back in October. Not only does Bitcoin have nothing in common with gold as a commodity, but it's actually inversely correlated with gold. It's becoming another way to bet against gold. Other investors are drawing similar conclusions. Christopher Wood Jeffries, global head of equity strategy, removed his 10% Bitcoin allocation entirely in January, citing the looming threat of quantum computing. He replaced it with physical gold and gold mining stocks. Paul Howard, a director at market maker Vincent, put it bluntly, I don't think we'll see a new all-time high for Bitcoin in 2026. The institutional exodus tells its own story. US spot Bitcoin ETF saw $4.57 billion in outflows through November and December 2025, their worst 2-month stretch on record. BlackRock's IBIT and Fidelity's FBTC are leading the exit, according to CryptoCron. Institutional demand has reversed materially. The smart money, it seems, is moving on. So where does Bitcoin go from here? As quantum computing advances, people who are still betting on crypto will begin to back off. This is not a speculation because it's already happening. Bitcoin encryption relies on elliptic curve cryptography, which a sufficiently powerful quantum computer could break using Shor's algorithm. According to Chainalysis, approximately $718 billion worth of Bitcoin is currently held in an address that would be vulnerable to quantum hacks, including early wallets, where public keys are permanently exposed on the blockchains. Estimates suggest a cryptographically relevant quantum computer could arrive by 2028 to 2035, and crucially, attackers do not need to wait. They're already harvesting encrypted data today, intending to decrypt it once quantum machines become powerful enough. And this just proves it's a ticking clock. The new investors who were sitting on the fence, watching from the sidelines, whether this was finally the moment to get in, are most likely going to stay away now. Why take on the volatility, the leverage risk, the quantum uncertainty when the stock market offers exposure to companies like Apple that just posted record earnings and are expanding into emerging markets with 1.4 billion potential customers? And the narrative has shifted. Bitcoin was supposed to be the hedge against inflation, the escape from fiat currency, the digital gold that would protect wealth as a government printed their ways into oblivion. But gold is now trading above $5,000 an ounce. Bitcoin is sitting at $67,000, down 45% from its high. In the race to be the safe haven, gold has won. And here's the thing about narrative. Once they break, they are very hard to rebuild. Even if there is a rebound, even if Bitcoin claws its way back to $100,000 or beyond, the idea that it could possibly replace gold as the hedge against inflation will forever be tarnished. The credibility is gone. That proof is in the price. When the world has needed a safe haven, investors fled to gold. They fled from Bitcoin. And that is not something you can talk your way out of.